Keep watching as I show you how our students took 6 opportunities during June to go long the coffee market. My name's Darren Young, this is Safety in the Market, and we're going to look after you for the next 10 to 15 minutes. First of all, our disclaimer: everything I speak about today is purely based on education. And for our Australian residents, T&D Global is an authorised representative of Sequoia Wealth Management, the holder of an Australian Financial Services licence. And all of this information is issued in accordance with the conditions of that licence. Here's a weekly chart of coffee. Now, it's not everyone's cup of tea, but it has a short trading day, so it can gap around. So just be aware of that. Some of our students love that fact and use the gaps to their benefit. Others are scared away from this market. Just going to show you how our coffee traders have been operating over the last few weeks during June. Now, we were sort of trying to find reasons for a low to come in to this market. We had a top and then a lower top, and you see this secondary range here, then another top and a secondary range down here, plus using this first range down. We're giving ourselves an idea that around 240 could be the low in this market on the slightly bigger picture. And then using some more recent weekly milestones from sort of Easter onwards. Again, this 240 area keeps coming in and giving us a bit of a cluster to watch out on our weekly chart. And then we dive down into our daily chart. We get some more milestones all around sort of that mid, we've got 242 there all the way up to 248. And that would have our students on alert, ready to pounce and start to go long this market. And just before we start, we'd have to have I guess a target area of where we think this market could go to initially. And we use this previous range here to guide us to a price of around 331. So not to say the market has to go to 331, but it just gives us a bit of a roadmap when we're looking for trades and I guess plotting our profit targets along the way. So just quickly, our software gives us the specifications for each market, each futures market, and the most important information here for us is just that each tick or each unit is worth 5 cents there. Okay, so trade number 1. All right, there was our low. We've got a little small double bottom. It's hit our milestones that we were looking at earlier. So our students will be watching this double bottom come in, and if it gets broken to the upside, they would enter on this green bar, their stop loss down below this red bar. And a lot of them use this particular range to guide them for their profit target at 273.8. And as you can see, if we entered on this green bar here, 1, 2, 3, 4 trading days later, we've hit our exit with that wonderful strong bar there. And a lot of our students would have exited trade number 1 up there at 273.8. That was our small double bottom. The reward, 2460 cents. The risk, 655. That gives us just under a 4-to-1 reward to risk ratio. I'm going to use a $5,000 account as usual, guys. I'm not going to add to that as we go. Our risk will be 250. We never risk more than 5% on any given trade. So that would give us a reward for 4 days of $937. Nice start to the month. Okay, trade 2. We've used what we call an opener's rule here. And that's because we've broken above this level of resistance here from this pocket of days or trading days at the low there. As we've broken above there, we've come back down, and then we thought, right, if we break above this inside bar now, we can look to get long, especially as we opened at the low. So we have methods of using an open like that. You can see it back here on this bar, and very similar open on this bar here. Okay, so we have a method of using that. There's our entry. Our stop loss would go below the open and the low of the day, and off we go. And again, a similar profit target up here of 273.8 again. Okay, we just, once again, just using this range to guide us for a profit target until we start to formulate some other ranges in this upward move. And that was trade 2 using the openers rule. And this time we got an 8.8 to 1 reward to risk ratio, which brought in $2,200 and only 2 trading days. Fantastic. Okay, like to get in and out nice and sharp. So things going well. Trade 3, this is just a regulation trade now. Now we're starting to create our own ranges to use for profit targets. So yeah, as we break down below this outside bar here, we know that if we can get above this red bar, we can enter the market. Our stop would go underneath. These are daily bars. Our stop loss would go underneath this red bar. We'd be into the market, and our profit target now is 330.95. Just remember, we had that profit target. If I show you this next slide, if you remember this slide from the start, we had our target area using a formula that we call an overbalance. We had a target area of around 331. So any sort of profit targets we can hit before that number will be more comfortable using. And we did use this particular range. So I'll go back to our slide. And as you can see, our profit target is just before the end of that blue arrow there. So we would take this trade. We'd be watching it very carefully as we got around this area, but happy to take this trade down here. And as you can see, we've punched straight through our profit target line there. So we've taken our profit for trade number 3. Very happy with that, just to get in before the 331 danger zone, if you like. That was just a regular ABC trade, 7.3 to 1 reward to risk ratio. And that would have brought in $1,800 over 8 trading days. So it took a bit longer, but that's okay. Trade 4. Now we're using an outside bar. This black bar we would call an outside bar. And we would enter as it broke above. You can see during the day it's gone lower, and then towards the end of the day it has broken above the previous day. So we would enter as that happened. Some of our students missed this intraday entry, if you like, but were able to get in using the openers the next afternoon. But okay, I'm going to show you this outside bar entry. Our stop would initially be below this bar, but once we were entered and we could see what the bar looked like, we would then move our stop underneath this swing here, and we'd enter that trade. And you can see our profit target for this particular trade, we have a shorter range to work off, is at 318 and 10 cents. So well before the end of our blue arrow there for trade number 4. And we've got a reward to risk ratio there of 4.1 to 1. So that brings in just over $1,000 there. Only took 4 days. So a nice piece of work there. Okay, trade 5. We're going to use this area of the market here. Trade 4 was down here. Okay, we've run up, and these are daily bars. We've come back down. Okay, and that would have our students thinking about a possible entry here. Can you see how both days have similar lows? All right, so if I take you intraday here, this is a 1 hour chart, and that is the end of the day previous. Okay, and as you can see, we have a little inside bar there to in between our entry bar and the low of the day before. And as we enter there, so we talk about our openers rule quite often. It means going intraday sometimes and having a look at these bars. It could be a 4 hour chart or a 1 hour chart. We open there, we can't break this low, and then we form an outside bar past this little red bar here, and we'd be entering at the breaking of that bar there, which as you can see is breaking the previous bar also, and then our stop loss would come down underneath these lows. So that gets us a nice tight entry. But as you can see, we're going to use this range here, and some of our students had put their target up at 335. Okay, it's pretty close to our 331. It's obviously gone past. So what we do in that instance is, yes, we'll look to take our profits up here, but obviously as the market hits that 331 area, we will be cautious. We may move our stop loss up just to protect capital, and just watch the market if possible to see how it reacts. And as you can see on this particular hour here, it punches through 331, which would be in here, and just goes all the way up through our profit target. So happy days there. No need to mess about with our stop loss too much there. So trade 5, pretty good. Nice low risk there. And we didn't go too far with our profit target because of that, I guess, danger window up ahead. So we've got a 7.75 reward to risk ratio, brought in just under $2,000. And it took, a matter of hours, one trading day. So very happy with that. Obviously, we are end of day traders at Safety in the Market. We do use the intraday charts now and again to enter the market for a smaller risk at particular setups, and then we will come back outside and try to manage that trade on an end of day basis. So this particular trade was in and out and done in one day. Okay, now trade 6. I've put this in, we're into July now, so we're no longer in the month of June. So take this one or leave it. I certainly left it alone because here's our target area that we were, I guess, concerned about, that the market might hesitate at this point, maybe fall away, and then we can start to, back test and see where we think the next opportunity might arise. For me, we're too close to this target for taking this particular trade, but I know students who are long currently. This was Friday's bar. This is Monday morning that I am discussing these trades. And here we've got our range. As we break back above this red bar here, this daily bar here, we can enter the market. Our stop loss will be underneath that bar. And then, as you can see, our exit is right up here at 395. All right, like I said, some students are in this trade. That's a strong close there. That's a strong close there. The market pulled back down on Friday, but couldn't get any further, certainly couldn't break our entry bar. And look where it finished, right back up the top, ready to possibly head higher. So good luck to our students involved in that trade. Personally, I'm not involved in that one, and we will see what happens going forwards. So that, that reward is up top there. The risk was there. I've just put in that it's beyond our target area. It's a 3.7 to 1 reward to risk ratio. It would bring in close to $1,000 if we get there. I'm sure our students are managing their stop loss and that trade each day. And we've had 4 trading days involved in that trade. Okay. Well, this will be the 4th one coming up. So there's our 6 trades, right down from the low early June. Okay, number 1, there's 2. The openers, the ABC, number 3, the outside bar, number 4. We went intraday for number 5. I've got number 6 in red there because 1, it's still current. 2, it's pushing the boundaries of where we thought this run would take us. Not to say that this market can't go higher and higher. We just like to try and work within a range to keep our money safe. And there's our 6 trades. And our checkbook indicator, trade 1, 2, 3, 4, there's 5, and 6 is open as we speak. Obviously that one is optional. And our 5 wins thus far have brought in just under $8,000 for the month of June. We're into July now, so it's up to you. We can just cross off number 6 if you like, but the 5 trades have brought in a nice sum. Good bit of work, a nice run from coffee after it been heading down for some while now. We'll watch how our students go with this particular trade. We'll be looking at our ranges to see what the market might do next and preparing for the next run. Okay, so thank you very much, guys. If you'd like to learn how you can replicate these trades, follow the link below to find out more about the Active Trader program, which will teach you how to consistently and safely build your trading account, often with 10 to 1 reward to risk trades. Thanks, guys. Good luck. See you soon.